Hey everyone, welcome back to Corporate Decoder, the place where we decode those dense corporate filings to find the juicy bits. And if you think that today's filing is going to be boring, think again, because we've got a company here that is about to go public, and what better way to kick things off than with a little bit of financial fireworks and a whole lot of newly appointed directors. So stick around. Before we dive in, make sure you are subscribed to the channel for more insights like this. And if you want to join a community of fellow corporate sleuths, the link to our Discord server is in the description below. Alright, so today we're looking at Apex Treasury Corporation, and this filing is really all about them preparing to hit the stock market with their initial public offering, or IPO. Think of an IPO as a company's grand entrance onto the public stage where they start selling shares to ordinary folks like you and me. This document is what is called a Form 8K, which is basically a heads-up filing to the US Securities and Exchange Commission, or SEC, when big things are happening at a company that the public needs to know about. And for Apex Treasury Corporation, the biggest thing happening is this IPO. So what exactly are they selling? They're offering units. Now, each unit isn't just one thing, it is a package deal. It comes with one Class A ordinary share of the company and then a little bonus a half of a redeemable warrant. Let's break down that warrant part. A warrant is like a coupon that gives you the right to buy shares later at a set price. In this case, each whole warrant lets you buy one Class A ordinary share for $11.50. This deal is happening as part of their IPO. The IPO itself is a massive event. They're selling quite a few units, and that is bringing in a serious chunk of change. Scroll United States Securities and Exchange Commission, Washington, DC 20549 scroll. The important part here is they're not just selling shares, they're also selling these units that include warrants. This is a common strategy for what are called special purpose acquisition companies, or SPACs. SPACs are essentially shell companies created with the sole purpose of raising money through an IPO to acquire an existing private company or to merge with one. So Apex Treasury Corporation is likely setting itself up to acquire another business down the line. And where are these new shares and warrants going to be traded? All of them are going to be listed on the NASDAQ Stock Market LLC, which is one of the biggest stock exchanges out there. Now, here is a little detail about Apex Treasury Corporation itself. They're checking the box that says they are an emerging growth company. This means they get to use some rules that allow them to delay certain financial reporting requirements. It is a way to ease the burden on smaller growing companies as they get started in the public markets. This part talks about all the important agreements they've entered into to make this IPO happen. Think of it as the legal paperwork that makes the whole public offering official and solid. First up, there is the underwriting agreement. This is the contract between Apex Treasury Corporation and the investment banks called underwriters, who are essentially selling their shares to the public. The main underwriter here is Cohen and Company Capital Markets. They're tasked with finding buyers for all these new Apex Treasury Corporation shares and warrants. Then there is the warrant agreement. This lays out all the rules and details for those warrants we talked about earlier. It specifies who is responsible for managing these warrants and ensuring everything is handled correctly. In this case, efficiency is acting as the warrant agent. This letter agreement is a big one. It is an agreement involving the company, its top people, its advisors, and its sponsor, Apex Treasury Sponsor LLC. The sponsor is like the founding investor of the SPAC who gets their shares at a very low price and often gets special rights. This agreement likely covers things like how the sponsor will behave and what rights they have. Next, we have the Investment Management Trust Agreement. Remember how SPACs raise money through an IPO? Well, that money doesn't just sit in the company's checking account. It is put into a trust account managed by a trustee. Here, efficiency is also acting as the trustee for this trust account. This ensures the money raised is protected and is only used for the intended purpose, which is usually to acquire another company. The registration rights agreement is important for the early investors and the sponsor. It gives them the right to have their shares registered with the CC so they can be sold publicly after a certain period. This is crucial for them to eventually cash in on their investment. And then there are the private placement warrants purchase agreements. These are deals where the company sells warrants directly to certain parties like the sponsor and the underwriters. It is a way to raise a bit more capital and to incentivize these important players. Here we see another one of those private placement warrant agreements, this time with the representatives of the underwriters themselves. So both the sponsor and the underwriters are buying these warrants directly from the company. This section talks about the sale of securities that didn't go through the usual public registration process. Here is where we see the details of those private warrant sales. The company sold around 8.9 million warrants for $1 each to the sponsor and the underwriters. This essentially gave the company an extra almost $9 million. These warrants are similar to the ones sold in the IPO, but they have some extra conditions. For instance, they can't easily be sold until 30 days after the company completes its initial business combination, and they can be exercised on a cashless basis, which means you don't need to pay cash to get the shares. This is where we hear about who is joining and leaving the company's leadership team. As part of the IPO preparations, 3 new people, William Mann, David Michalecki, and Betty Liu, have been appointed to the board of directors. Importantly, these 3 are considered independent directors, meaning they don't have significant financial ties to the company outside of their director roles. This is good for corporate governance as it suggests they can make decisions in the best interest of all shareholders. These new directors are also taking on key roles on important board committees. William Mann and David Michalecki will lead the Audit Committee and the Compensation Committee, respectively. The Audit Committee oversees the company's financial reporting and internal controls, while the Compensation Committee determines the pay for the top executives. Betty Liu and David Michalecki are also on the Compensation Committee. As part of their appointment, these new directors are getting compensated not just with cash but also with Class B ordinary shares. They've also entered into standard agreements, including indemnity agreements, which protect them from personal liability related to their service as directors. They each received 30,000 Class B shares. This section deals with changes to the company's foundational legal documents. In preparation for the IPO, Apex Treasury Corporation has updated its amended and restated memorandum and articles of association, which are basically the company's constitution. These changes were made effective on the same day as the IPO preparation kicked off. This is a catch-all section for any other significant events that don't fit neatly into the other categories. Here we get a clear picture of the money raised from the IPO and the private sale of warrants. A staggering $344.7 million has been placed into a trust account managed by Efficiency. This money is essentially earmarked for the company's future business combination. This is a crucial element of the SPAC structure. The funds in the trust account are protected and can only be released under specific conditions. The primary condition is the completion of the company's initial business combination. If they don't find and complete a business combination within 24 months of the IPO, all the money in the trust account is supposed to be returned to the shareholders. This provides a layer of protection for investors. So essentially, this SPAC is set to either acquire another business or return the money. They've also released press releases to announce key milestones, such as the pricing of the IPO, and another one announcing the actual closing of the IPO. These are essentially official announcements to the public confirming these major events. This section is like the file cabinet at the end of the report, where all the supporting documents and exhibits are listed. Here you can find a list of all the agreements and documents that back up the information in this filing. It includes all those agreements we discussed, like the underwriting agreement, the warrant agreement, and all the others that form the backbone of this IPO. It is like a table of contents for all the extra paperwork that proves what the company is saying. For example, the underwriting agreement is listed here as Exhibit 1.1. And finally, the signature section is where the company's authorized representative signs off on the report confirming that all the information provided is accurate to the best of their knowledge. So what is the big story here? Apex Treasury Corporation is essentially a blank check company. Its main job is to go out and find a private business to merge with using the $344.7 million. It just raised through its IPO. The clock is ticking though, as they generally have only 24 months to make this happen, or the money goes back to investors. The appointment of independent directors is a good sign for investor protection, and the careful structuring of the trust account offers some assurance. The key risk here is always the success or failure of that future business combination. Will they find a promising target and integrate it smoothly, or will they run out of time and disappoint their shareholders? Time will tell, but for now they've successfully navigated the complex path to becoming a publicly traded entity. Alright, that is our deep dive into Apex Treasury Corporation's latest filing. What is your take on this SPAC and its future prospects? Do you think they'll find a great company to merge with? Drop your thoughts in the comments below. If you found this analysis valuable, please hit that like button. It really helps, and subscribe for more financial deconstructions. And don't forget to join our Discord community for more discussions. Thanks for watching, and we'll see you in the next one.